Hello, my name is Tim Gregory. I'm from Vermeer Investment Management, where I am the Senior Fund Manager responsible for global equities. I hope everyone is managing to do okay, and their friends and family are all okay too, and getting through this very difficult situation that we're facing with the coronavirus pandemic. Clearly, markets have had a very strong rally in recent weeks after the bull market peaked in February. One area that will be of particular interest to investors will be the earnings season. Now, under normal circumstances, what we have become used to are companies providing their results, but more importantly, normally, is the guidance that they provide going forward. And at this particular time, given the significant economic dislocation we're seeing, this is nigh on impossible for companies to provide. Now, a number of companies who've got greater visibility in their business and have been able to carry on relatively normally will be able to continue to provide that guidance. But what we expect to see is that companies will report their results and then simply withdraw guidance because they have no visibility, particularly to the second and third quarters of this year. Clearly, for most companies or many companies, they are going to say that demand for their products has collapsed in an unprecedented fashion, but they have no clarity at this point in time as to when recovery will come, the scale of that recovery, and what shape that will be. Now, normally, withdrawal of guidance would be taken very negatively, but these are unprecedented times, and we believe that markets will not focus too heavily on the withdrawal of that guidance. And we've seen a number of companies already who have updated on their first quarter and have withdrawn guidance for sensible reasons because of the lack of visibility. And stocks have not responded negatively to that thus far. What we think will be more important ultimately, because 2020 to a degree has already been written off as a disastrous economic year from which there's no visibility on recovery. But as the year progresses, we think there will obviously be greater attention to earnings for 2021 and with a hoped for recovery coming through as things begin to normalize. And beyond that, albeit visibility beyond 2021 is almost impossible to forecast. So we think that companies will report their earnings, take away guidance in the main, but markets will be generally sanguine about that and will be far more interested in the company's commentary on their financial position, their ability to get through the worst of this period of time, when they are going to be in a situation where, from a consumer spending perspective, for example, they're going to be reliant on the governments providing money, and the central bank providing liquidity to continue to keep the economy operating and bridge the gap between when the economy can get back to normal and people can restart their jobs again, of which so many have been lost in recent months. So it's going to be a strange earnings season. We don't think that people will worry about lost guidance in the short term. We think that clarity will come later this year, and that's when that will be important again. I hope everyone is able to stay safe and get through this particularly difficult situation, and I look forward to speaking to you again soon. Thanks very much for your time.